Okay, welcome to the Matrix, the volatility matrix. If you saw the movie The Matrix, that's a great movie, the first one. The sequels can be debated. That's up to you. If you haven't seen the movies, you should. Certainly the first one was terrific. But with volatility, you can kind of think of it like a kind of a matrix where there's matching up between the type or degrees of volatility. And volatility, as we learned, can be abnormally low or abnormally high. Low, just would typically be just before a turning point is coming, and high would be the first big thrust of a new trend. But you also need to consider, when you're looking at that volatility, is something trending or not trending already before this, low or high volatility, starts coming into play. So we're going to look at that kind of matrix between these four kind of concepts as far as putting that all together. And we're going to look at that graphically, and then we're going to break this down in great detail, looking at degrees of volatility. You may hear the term variance. That's okay too, but so variance or volatility can be used interchangeably. And we have these long, straight lines basically representing the high and the low. So we're looking at the range of prices. So that's what volatility measures look at, is you're looking at ranges of pricing. And as you can see, we have these different types of combinations of variance or volatility and with or without trending. So let's look at each of these in turn now. So when you see low variance with trending, right? So there's very low volatility, but it is trending. It's part of something that's already there. So you would see it, something being low variance would be very orderly, right? There's not a lot of ups and downs and a lot of movement all over. It's all very orderly. And you can easily see the trend too. So low variance with trending. And this is a great opportunity. This is, you consider, the best trade opportunity with the highest probability for profit and lowest probability of loss in that. And your reason for this, you're better able to project the future price movement with more confidence than with a high volatility security, because it's all nice and orderly, very low volatility. And generally, hold a low volatility with trending for longer periods of time, which can help reduce like trading fees or other types of fees too. You can kind of let it ride a little bit because you're not getting a lot of ups and downs. It's all very orderly. It's trending in a certain direction. That trend could be either up or down, by the way. This happens to be low variance with trending, and as you can see, we're definitely in an upward trend. So if we bought earlier, we could feel confident that that trend is going to continue, and that's all very orderly. Here's an example now. If we look at another way of looking at low variance without trending, again, low variance, it's going to be very orderly again. You're not seeing real high highs or low lows or anything like that, and all mixed up. It's all very orderly because that's the low volatility or low variance part, but it's moving sideways. There's no real definite trend, either up or down. So you really don't know which way it's going to go. It's not real predictable at this point, and you really shouldn't trade it because you don't know what's going. You can't really try to use an indicator and really try to base a good logical decision around it. So there's no basis for an expectation of gain. You're almost a little bit more guessing at that point. So it doesn't mean you can't trade. I'm just saying look for better alternatives, right? There's always better alternatives than trading into something that might be moving more sideways. That's highly hard to predict. But you can see very orderly, moving sideways is low variance without trending. Now, one thing you can see when you see this sideways movement, you're trying to see if something is going to change. You can use your other indicators to kind of recognize when you may have a reversal or maybe a breakaway gap or something that's going to establish a new trend. But there's an exception when you're looking even at, let's say, volatility, is there's still no trend emerging, but if the bars, the whole trading range from high to low, start to contract or widen, that's a powerful signal that a breakout or a new trend may be coming. Although you don't know which direction it's happening yet, unless you're using other tools like candlesticks and your other indicators. But if you have that orderly low volatility, low variance without trending, and then all of a sudden you start to see the highs and lows start to contract, as you see in the example in the circle here, that means that something might be happening where now we're going to see a dramatic move in another direction, either up or down. So watch for that contracting, or it could be an expansion of the bars too. Either way, there's no, it's starting to get a little less orderly as far as the bar length. So if we look at high volatility or high variance with trending, so there's a trend, but there's a lot of variance within that trend, and it's really not orderly at all. Remember our low variance with trending, how nice and smooth that all looked, and nice, just generally marching up the mountain, so to speak. Well, here it's a definite going upwards in that example, but it's all over the place as far as the pricing. So there's a trend, but it's not clear or possibly as strong because it's so volatile. Now you can trade it. It is a trend, right? We want to trade on trends, but increased volatility can increases the potential for loss. So because it could be going up, it could reverse. There's just a lot of volatility with that. But when you know that you're in a high variance with trending, you can trade that and then understand and then adjust your settings on how you might place an order as far as what you're buying and how you're buying it. And you can execute something that's called like a stop loss order sooner. Basically, a stop loss is setting a lower, where you buy something and then you set a price level below it to, if it falls below that price, your platform is going to automatically sell it for you so you don't, experience as deep a loss. We're going to go all into that, by the way, in the order section, and we're going to talk a lot about stop loss because it's very important when you're trading securities. But for now, just to understand that there's ways to get through, something that's trending in a great manner, but there might be a high volatility. Again, the trend could be either upwards or downwards. You're looking at it and you're saying, but there's very volatile. There's not much order to it at all. And if you see like an established trading range with established support and resistance levels, looking at the chart pattern type section, where you can kind of buy and sell as you approach each of those levels. It's still trending, but it's with more volatility as it moves in the direction of the trend, but it's kind of bouncing up and down against these support and resistance levels. So you can kind of watch that, but that's more of a trading on a chart pattern as opposed to trading on a volatility with trending pattern. But you can do it. And then lastly, if we look at high volatility or high variance without a trend, there's no established trend, and there's a lot of volatility, really a lot of price ranges, wide ranges and price movements all over the place. So it's not orderly at all, which makes it harder, but also there's no trend. So it's really hard to predict the next price move, particularly since there's no order to it and there's really volatile up and down all over the place. So it's hard to predict what will happen next, hard to use your indicators. So what you should do is really don't trade it. Look for better opportunities. Look for something that has some, more of a trend to it. Whether it's with low volatility or high volatility, at least you've got a trend and you can use your indicators and make better trades. So don't trade, high volatility, high variance without trending. Look for something better, something that's trending. Alternatively, when you see this, one thing you could do is narrow the time frame down to like a smaller time frame, like an intraday time frame. Say 15 or 60-minute bars. And look for tradable swings to get in and out. So if these bars that we're seeing here in the example represent a full day of open and closed trading with, as far as our range of highs and lows, inside there, it might be some trends inside those days, and you're trading on a 15 or 60-minute bar or even less than trading on something on a day type thing. So that's what day traders would do, or swing traders. Some folks that are looking at these shorter time periods, they could still trade a security they're interested in. They just might need to get in and out faster when you're seeing high variance without trending, and you're really looking at that point not in overall day trends, like this is representing here. Each one is a high and low of a day. You're looking inside each of those single day bars, trading within it, and then getting out and closing your positions. So that's our matrix of the degrees of volatility or variance with and without trending. And you can kind of get a feel for whether a reversal might be coming, or if there's a strong trend or a trend continuation, or maybe we're just going sideways here. And then we have some indicators that we're going to now learn about that really help us to understand a little bit more about what's going on with volatility, and some real good ones to help us as far as actually making trading decisions on whether we want that to be a primary indicator, or maybe we're going to use some of these volatility indicators as a second or third indicator to help confirm another trading indicator that we might be using from another lesson that we've learned that can be real helpful when you're looking at volatile types of markets. And then it's a matter of the degree of that volatility or variance.